Welcome back to Market on Close. I'm Sam Vardas, live from the floor of the New York Stock Exchange. It's time now for Overlooked Stocks, and today we're watching TE Connectivity after shares hit a new all-time high today. And I'm joined by Alex Coffey, Senior Equities Contributor, to tell us all about that. TE Connectivity is higher today, as we mentioned. What's the reason behind all of that, Alex?
Yeah, I think first off, this is a pretty big overlooked stock in the sense that we're talking about a company that's got a market cap of about $67.5 billion, employs about 85,000 people worldwide. It is incorporated in Galway, Ireland, which I thought was interesting. But it is truly a global company, Sam. When you look at where it generates revenue, about 37% of it in Europe, Middle East, and Africa. 34% in the Asia-Pacific market, and then the balance around 29% in the Americas. It's a global technology company that designs and manufactures connectivity and sensor solutions for a wide range of industries, with its biggest being transportation solutions, so thinking automotive and commercial transportation. But this is a company that got a outperform rating and a price target increase from Evercore ISI, increasing the price target to 250. We're expecting earnings next Wednesday before the close. So perhaps on the heels of some of the optimism you saw out of some of the names that reported today, you're seeing a pretty big move today in TEL.
Yeah, it's interesting. You mentioned that market cap of about $67 billion. I'm just looking at it sort of compared to its industry peers across the space. I mean, it's Amphenol, for instance, Corning, DuPont, Celestica, TDK Corp. And, you know, it sort of sits in the middle of the range as far as market cap is concerned. I'm just wondering, I mean, you talked about some of that international exposure, but sort of where does it stack up across the sort of industry peers in this space?
Well, what I would say is in this case, there's several different peers that it would have depending on the segment you're looking at. When you look at its transportation segment, obviously that's going to be different from its industrial solutions segment and even its communications segment, which of course is providing components for data, wireless, and consumer applications when you look at that particular segment. So when you start talking about these companies that are kind of larger conglomerates that serve multiple purposes, they don't really have pure competitors that are easy to compare them to. When you start to think about this particular company, though, companies like Honeywell and others oftentimes pop up. When we look ahead to next week's earnings, I know analysts are very focused on a book-to-bill ratio as a key indicator for its mixed kind of end markets that it has. One of the things that also is going to be important to watch is its transportation sales, as that's been more of a sluggish segment for it. Particularly as Europe has been weak as a region, so it's its biggest segment and its biggest market. That said, though, they do have some decent-sized growth in China, and their margins have been pretty flat to steady despite some of the cost inflations that they've dealt with. It's been a bounce-back year for this company when you start looking at its performance over the last few. Revenue had been relatively anemic. There wasn't really any organic growth last year. That's expected to change for this year as the balance of the year is expected for about 5.4% organic growth and about 8% in total revenue growth, which would be a bounce back from the 1% declines the last 2 years in revenue. So a company that's really starting to turn the corner and really start to assert itself as a key player within its industries.
Oh, for sure. And as you mentioned, quite a diversified business here, and particularly when you're looking across the industrial space. And I've seen that it's also in sort of the business of the data centers as well. I mean, can you speak to the 60% rally that we've seen year to date? I know you just mentioned, obviously, that it's been sort of catching a bid. But, I mean, is this just a general function of the fact that we have seen a sort of good run for industrials, broadly speaking, and also off the back of just basically the AI hype and the whole sort of broader technology theme?
Yeah, I think that there's your narrative as to why this company is getting some love, but it also has the fundamental picture to support it as well. I mean, if you look at its performance in its fiscal year 2023, its earnings declined by 8% and its revenue fell by 1.5%. You look at last year's or its fiscal year 2024, revenue declined still by 1.18%. It had negative organic growth percent of about 0.1% to the negative. But it started to show earnings growth. It grew its earnings by 12%. It was able to maintain that if it hits its numbers throughout the rest of this year and actually increase that to about 14% earnings growth. But its revenue growth also bounced into something positive now, about 8%. So I think you have the narratives as to why this is a company that is maybe being supported by the market, but the numbers financially also support the rally as well as a bounce back year.
Okay, fundamentals look good and a couple of tailwinds for this company as well. Thank you so much, Alex. TE Connectivity sitting up 1% right now.